Let's talk about 2025. What a wild year. If you followed the conventional wisdom in the stock market, if you played it by the book, you probably lost. Today, we're going to break down why chaos reigned and how some investors managed to win big in a year that just defied all logic. And this quote, man, it just nails the feeling at the start of 2025, right? You had the looming threat of tariffs, markets were already at dizzying heights. I mean, every rational part of your brain was probably screaming, get out. But the market, as it so often does, had a completely different script in mind. Okay, so first up, let's dive into the absolute heart of the storm, the U.S. market. It wasn't just volatile, it was a year-long stress test that bent, but incredibly did not break. Let's see how. Wow, okay, just look at this chart. It seriously looks like a heart monitor during a panic attack, doesn't it? Imagine living through that massive drop in the spring. That would have shaken out even the most seasoned investors. And yet, look where it ended up, a 16% gain. How on earth did we get from that cliff's edge to a new peak? Well, the answer is in the sheer whiplash of events that came next. And this timeline, it's just a masterclass in market chaos. Think about it. The year kicks off with the DeepSeek shock, this sudden panic that a new Chinese AI could just make all our existing tech obsolete. And boom, NVIDIA loses a jaw-dropping $600 billion in value in a single day. But before the market could even find its footing, bam, we get hit with the Liberation Day tariffs, sending everything into a 19% nosedive. But then, just when you think it's all over, you get this 1-2 punch of government stimulus and the Fed cutting rates, and the market just blasts off again. It was this relentless, dizzying cycle of pure panic and then pure euphoria. So all this craziness actually created this bizarrely predictable pattern. Traders even gave it a nickname, the taco dynamic. The idea was the administration would make these aggressive trade threats, the market would tank, and then, almost like clockwork, they'd walk it back to calm everyone down. If you were brave enough and quick enough, it became this surprisingly reliable, though I'm sure stoic churning, way to trade. But here's the thing. The U.S. wasn't living in a vacuum. All this chaos sent these massive ripples all across the globe. And what you find is that different countries were dancing to completely different tunes. What felt like a roller coaster in America, well, it looked very different somewhere else. And this slide right here, it's the perfect example. Just look at this split between Europe's two biggest economies. You've got Germany's DAX on the left, just taking off like a rocket. And then on the right, France's CAC 40 just kind of sputtering along. Now, they were facing a lot of the same economic pressures, so what gives? What drove them so far apart? Well, the answer wasn't buried in some spreadsheet or economic report. It was right there in the political headlines. Germany's market shot up 23% in what they called a hope rally, this wave of optimism after an election that promised big reforms. Meanwhile, France got slapped with what analysts started calling a sovereign discount. Its government was collapsing, there was so much uncertainty that investors basically said, hey, we need a discount to hold French stuff. And that's why their market only managed a 10% gain. And then you have Asia, which was playing a completely different game altogether. I mean, it was on another planet. While the US was freaking out about AI competition, South Korea's KSPI index just exploded, up 75%. And why? Because their companies were the ones making the critical hardware, the memory chips that powered the entire global AI boom. It was a pure, direct bet on the tech revolution itself. So, all of this brings us to a really crucial point. With everyone laser-focused on tech stocks and all the political drama, the real superstars of the year, well, they were kind of hiding in plain sight. So, here's the big question, right? Amidst all this chaos, where was the really spectacular money made? And if you're thinking the answer is obviously AI stocks, you are in for a big surprise. So you remember the Magnificent Seven, right? The tech giants that have been carrying the market for years? Well, in 2025, that group started to splinter. Sure, Alphabet had an amazing year, and NVIDIA managed to claw back its losses, which was impressive. But look at this. Microsoft, Meta, Tesla, Apple, and Amazon, all of them failed to even keep up with the plain old S&P 500 average. The big lesson here? The old leaders were no longer a guaranteed win. So if it wasn't the big tech names, who was the undisputed champion of 2025? It wasn't some flashy tech darling. It wasn't a cutting-edge AI company. No, it was silver. Good old-fashioned, old-school silver. A safe haven asset that went on an absolutely unbelievable 147% rally. Can you believe that? While everyone's eyes were glued to the tech roller coaster, the real killing was being made in a classic flight to safety, a hedge against the very chaos we've been talking about. And that, right there, brings us to the single most important lesson of 2025. How could anyone possibly win in a year where super high-tech growth and super old-school safety were both the winning trades at the same time? The answer, it comes down to one simple word. Look, the winning strategy wasn't about being some kind of genius who could predict every single political tweet or every AI breakthrough. No way. It was about being humble. It was about building a portfolio that was just ready for anything. You needed an umbrella that could shield you from the storm, but also let you soak up the sun when it came out. And here's basically how it worked. On one hand, you had your growth assets, like stocks, ready to capture all that massive upside from things like the AI boom. But at the same time, you had your defensive assets, like silver and gold, ready to protect you from all the big picture macro fears. But here's the crazy part about 2025. This wasn't just a defensive move. It was a strategy of abundance. Both sides of the portfolio, the offense and the defense, delivered incredible returns. And this strategy went beyond just having different types of assets. If we look at the allocation of a successful group like the Mansa Fund, you can see it was also about geography. Being spread out globally meant investors could catch that hope rally in Germany and the AI boom in South Korea, and that helped balance out any weaker spots elsewhere. I mean, this quote from the fund's manager just sums it all up perfectly. It wasn't just about hedging bets. It was about having a ticket to multiple winning themes all at once, no matter how contradictory they all seemed. And that really brings us to the huge question hanging over all of us as we look to 2026. The market is trading at valuation levels we haven't seen since the dot-com peak, and that's making a lot of people nervous about an AI bubble. But the counter-argument is strong too. Unlike back in 2000, today's tech giants are absolute cash flow machines, and AI is driving real, tangible profits and record efficiency. So, is it a bubble just waiting to pop? Or are these crazy high prices actually justified by a fundamental shift in how businesses make money? That is the multi-trillion-dollar debate to watch.